Options are financial contracts that give you the right to buy or sell an asset at a set price by a specific date. Think of an option as a voucher that lets you lock in a price for a stock regardless of where the market goes. One important rule to remember is that a single standard option contract typically represents control over 100 shares of stock. Every option is defined by these 4 elements, which determine how the contract behaves as the stock price shifts over time. While owning stock gives you a permanent piece of a company, options are temporary contracts that can expire worthless if conditions are not met. As an option approaches its expiration date, it often loses value due to time decay, a phenomenon traders call theta. Always remember that options are high-risk instruments. Many investors use them to hedge existing positions rather than for speculation. Thanks for watching. Understanding the risks is your first step in financial literacy. Subscribe for more basics on how markets function.